Hey friends, it's Simon with Trade and Perform Coaching, going over the trade review for Wednesday, the 12th of April. Before I do that, let's go ahead and just get the legal notice out of the way. It's an important disclaimer and a reminder for all traders and investors. This video is for educational purposes only and not a recommendation to buy or sell any particular financial instrument. Equities, futures, options, and currency trading have large potential rewards, but also large potential risk. You must be aware of the risks and be willing to accept them in order to invest in the futures and options markets. Absolutely do not trade money you cannot afford to lose. I cannot stress that enough. This website is neither a solicitation nor an offer to buy or sell equities, futures, or options. No representation is being made that any account will or is likely to achieve profits or losses similar to those discussed on this channel. The past performance of any trading system from any place or any methodology is not necessarily indicative of what the future results will be. Absolutely consult your registered financial advisor and your risk trading plan before ever investing or trading in any financial instrument. Okay, so let's move on from that now that we got that handled. So today, let's jump in this morning. So first of all, I had massive internet problems and was not here, but if you look, we opened right in the middle of the prior day's range, right? And we've kind of been just stair-stepping this all the way through. We have not had the consistency that we would usually look for in terms of push. What I mean by that is normally we've been opening up, right? Most expectations have been slight gap down, open up, gap fill, and continuation up. If you look at everything from really going back to December all the way through March, that's been the pattern. The pattern has changed, right? So I had a couple of notes on the chart when I posted them to the members the prior evening, which is 2350 is the over-under for the day. And that meant that I wanted to see it above 2350 in order to make a bull move. We clearly couldn't even get up to, we couldn't hold above 2350. We came one tick shy of getting there. I thought it was a very key area. 2345 was the point of control for Tuesday, and you can see as we opened, we basically bounced between 2345 and 2350. The market just kind of couldn't make up its mind which way it wanted to go, and it was pure chop for the first hour. This is indicative of holiday trading. That's your broker making a lot of money and you losing money unless you kind of nailed exactly 2340 and you nailed exactly 2350. But most people can't or don't do that right accurately. It's a very small breed of traders who kind of can figure out in the opening moments, well, this is exactly what's going to happen. We're going to have balance. We're not going to drive up. We're not going to drive down. And so when you see this kind of chop going sideways, what I coach people to do is go in and look for the extensions, right? Because the easier trade is going to be on the extension up and getting exhaustion, or getting down and finding key location. And when you find that key location, look for a couple of things. Tick divergence, right? Trade patterns, meaning can we break a swing high or swing low? Can we show an attempt to push down hard with the inability to break the low? So I'm going to show you because a couple of those things happened here today. So I definitely would not have had a trade here in this area. I don't trade chop. I try to stay out of it completely if at all possible, right? I do think I would have had a trade into 2340. My internet was down. They cut the fiber optic cables. And I'll tell you the reason why I can feel pretty confident in saying that. Look at the tick divergence. Look at the divergence in the effort. This is the amount of effort put into the market to achieve this 2342. Look at the amount of effort that was put in to achieve 2340. We hit a new low, but there was very few participants in the broader market, right? And that's a big key signal for me. Now, here's what was hard. We're getting into holiday trading, so we didn't get a quick snap out of the market, right? And so what I would have hoped for was to come in and snap. As a matter of fact, I was speaking to Randy, was sending me messages over Skype, which I could get on my phone, thankfully. And he was telling me we had tick divergence into this area. And I said that's a good sign. Usually we get a lift. But if you look at the amount of time, we got the tick divergence at 10:30, and we really couldn't get any more than a 1.5 or 2 point lift if you took the front of the zone, which is where I would usually look to take that trade. If you took the front of the zone, it took a long time to get a rotation up to 47, all the way from 11 o'clock all the way over to 1:30. And what I want to show you is as you're trading, right? Everyone always says, well, boom, there it was perfect, right? But remember, when you're looking at it like this is the picture you have, and you see the tick divergence, right? And I'll spread that out just a little bit. Let's go back out so everyone can see it clearly. So I want to talk about it psychologically, right? You see this trade, and let's say you took it at 40.75, right? And you're sitting there and you're waiting, and you're like, yeah, this is the right trade for me, and this is the trade I've been wanting and waiting for, right? So now I got tick divergence, but now you're looking like we couldn't get any lift in the morning. We're kind of running down. We're not, the key area is a little bit lower. It's down here into this Wednesday's low is really what we were looking for, because for a retest of a potential double bottom, right? So you're sitting here and you're like, okay, so let's go through it tick by tick, right? 5 minutes, 10 minutes, 15 minutes, 20 minutes. We've broken behind the back of the zone, right? So we still haven't hit our 2-point stop behind the back of the zone, but the reality is the majority of people are feeling a little nervous about the trade at this point, right? And you've got to hang on to that tick divergence as your guide as to whether or not the trade is going to pan out for you or not, right? So if you look, we come in. Now that bar, that's a great bar, right? Closes above the prior 5-minute high. It's essentially an engulfing bar. Not quite, but close enough, right? But now you're in for 5, 10, 15, 20, 25 minutes, right? So you have two options here, and this always comes down to the trader. No one can tell you what to do, right? But most of the time, these snaps come in less than 30 minutes. So when I'm at about 25 minutes, I'm thinking maybe I should move my stop towards the low down here at least, right? Or I can exit the trade with a very small loss. Again, every trader is going to be different. For me, I would have been looking to target this 23.45 back up because I was expecting balance, right? But if you look, here's the next bar. You're now in 30 minutes, right? It's starting to look better, right? Each 5-minute bar is closing higher. It finally gets up to 42. The target from here would have been, if you took the very top of the zone, would have been 40.75, and the highest it was able to achieve was 42.50 on the ask, and it backed right down, right? When I get that close to my initial target, and I've spent this much time, right, the way I look at it is sometimes the market's going to pay me quickly, and that's what I want, right? But I'd rather be a little bit allergic to losing money and attempt the trade multiple times than let it draw me all the way down. So watch how this process actually took all the way through, and this is how I do my homework. What we need to happen here is we need to break, in order to get an extended move up, we need to break the swing high, right? We need this low to hold now, right? And then you've got to figure out what your nerves can handle or cannot handle in terms of trade. So you've been in this 5, 10, 15, 20, 25, 30, 35, 40, 45 minutes. You almost get your scale, right? Because we're targeting 2 points. When I miss that scale and I get this bar, I'm just going to try to come back in and grab this 42 on the backside. And I think you get on the next bar, and you did. I was watching off my phone again. It was a horrible day in terms of internet connectivity. AT&T totally dropped the ball. This is where I would have been out of the trade, with the exception of leaving a small trailer, right? So if your nerves would have handled it, mine don't that well, right? My stop needs to be 1 tick below this low. So if you come through and you look at the price action slowly as it develops all the way through the day, notice the tick is improving as we get through here, right? Makes another run towards the low but can't break it, right? And notice again, tick, as we push this low, tick is not getting worse, right? So tick through again, and then we finally, after 2 hours, I call this excruciating. This is not my ideal trading environment. And by the way, I expect more of this tomorrow. So if you're trading, don't be surprised if we get this kind of environment. If it's different, that's great, but it would not shock me to get more of this tomorrow, right? Tick, tick, tick. Finally, explosion right up. Look where we get the rejection right out of resistance. Pushes in, rejects out, and then we roll back down because we're in balance, right? We couldn't exceed. This is the low tick. We had tick divergence in here. We hit the high tick of the day. We couldn't break the high on hitting the high tick of the day, right? These are all things to think about. And we've broken the swing low, which means that the structure has at least improved, right? And then lastly, when you're watching through, we finally make a push back to we cannot break the low of the day again. And by the way, normally I would look for a re-entry on a trade somewhere in this area. on a pushback down after we hit here and we broke that swing high. And that is a high odds trade, although it did not pan out today due to the balance that we were in. So what's the message from today? Number one, avoid chop, right? If you see it not making a directional move, it can't get over a key location, which is identified on the chart, hold your guns back. Once you do get a stretch, we're looking for tick divergence into a key location. We got that. Then you have to decide what is your time frame that you are willing to hold that trade, right? Because if you're trading leverage or non-leverage, it's going to dramatically change your point of view, right? And our key, remember that this is a 10-point stretch, but the average rotation has been 7 to 15 points. So it's very possible that we could have busted and come down to this 23.34. So I know that I spoke to a couple guys in the room. They got this trade. They made money on it. Some of them broke even. Some of them made money. That's great. And the zone did its job, right? It held the market for over 25 minutes. Actually, it held it all day long. So the zone did a great job. This zone did a great job. It held the market, and the bull-bear line was perfectly placed at 23.50. Kind of gave us guidance, right? So now, right, shifting over from that picture, right, for tomorrow. Let's take a quick look. I'm going to go ahead and preview tomorrow's chart, even though I'm going to publish this publicly, right? This 34 to 31 and a quarter, look, it's been a reversal point 3 times, and it's been a trap point. It's been a reversal point now 3 times, including the 11th, just a couple days ago, Monday. It's been a trap point 1 point. It's an important area. I would expect them to try to really kind of battle it out in this location before just completely giving up the ghost on this particular location. But if they do give up the ghost, I do expect them to make a quick stretch down to 26.24. What I want to bring up, and the reason why I have the 15-minute chart over here, is when you look to the left, see this whole area down here? So you see when we broke above, we backside tested 24, this 26.24, and then we continued higher. But this whole area is thin, and it's begging to retest this 2018, right? I'd really want either, if I take this trade, a quick snap out of the location, or option 2, tick divergence and my rotation, but I am going to be scaling out of here because my concern with where we close, right? So we close at 23.40, 20 down puts us into 23.20, and if it gets sloppy tomorrow, we're likely to hit that, right? Below there, and then I also want to show you one other thing. If we look a little bit further to the left, and all answers are to the left, by the way, you'll see that 23.24 was a major contra location prior to us breaking out, right? And again, this is all RTH. I'm not analyzing the 24-hour chart here at all, right? So I do expect a response out of 26.24 for multiple reasons. There's a high volume node. It's been a contra location before, but I'm not willing to stick around too long. I want it to snap out, right? And I'm certainly going to be scaling to help myself out, and I would expect it to backside test 31.34. This becomes critical. If we can hold above 31.34, we do have the potential. We've been down multiple days in a row now, right? We do have the potential snapping back towards that 23.50. Okay, so key area. On the other hand, we failed to hold this. We're almost certainly coming into 23.20, 18. And the one key thing that I'm watching for there, seeing as it's trend day down, right? The key thing that I'm watching for there is can we get a higher low and then a retrace, right? So just like we had today, I want to see us break the last swing. And if you can push this onto a 5-minute chart, you'll see. So just like here where we had this last swing down, we clearly broke actually 2 locations where we were trying to push lower, right? So just so everyone can see what I'm talking about, we clearly broke this location and we clearly broke this location right here. And I am normally looking for some type of retrace with a stop at the low of the day to get a reversal back up, and that'll be the key thing that I'm looking at for tomorrow. I'm also cautious if I can't get bars, if I start getting 5-minute bars that can't close above each other, range expansion at the open drive lower, right? I'm not looking to be a hero into those areas. I will wait till they give me the tick divergence or whatever it is that I need to make that trade work. Anyways, my name is Simon. Have a good night. If you'd like to join us in our room, see what we're doing in there. A lot of great education goes on in the room, a lot of great learning about how to trade ES and become a successful trader. Email me at tradeandperform@gmail.com. We'll be happy to extend you a 5-day pass so you can come to the room and check it out. Anyways, I hope everyone had a great day. Hope everyone's having a great Passover. Everyone who celebrates Easter is going to have a great Easter, and I'm prayerful that AT&T and Comcast can keep their T1 fiber optic cables unsevered into tomorrow morning. So I'll see everyone then. Have a good night.